My friend, look at this chart for a moment. MACD just crossed here. Most traders will enter this trade. But watch what happens next. This is why many traders lose using MACD. Let's understand this simply. MACD is not giving you the future. It is showing what already happened. That means, it is always a little late. Look here, gold moves fast. MACD reacts slow. Today I'll show you how to use MACD indicator correctly. By using XAUUSD chart examples. And how to avoid entering at the wrong moment. Because if you use MACD alone, you will lose. My friend, let's not guess. Let's read the market step by step. Why traders lose using MACD, live example. Let's understand this simply. MACD is showing what already happened. It is not giving you the future. That means, it is always a little late. Look at this example. Market already moved. Then MACD gives a signal. You enter here. And price goes against you. This is not bad luck. This is totally misunderstanding. Use this small trick. Instead of asking is MACD crossing? Ask this from yourself. Where's the market going? Real MACD strategy. How to use MACD correctly, very simple. Look at this XAUUSD chart. Step 1, direction. The first thing you must do, identify the trend. Higher highs. Higher lows. The market is going up. Step 2, wait. Now we wait. We don't chase the price. Price comes back. Now we need confirmation before the entry. Step 3, confirmation. This is the time we look at MACD. This time, it aligns with the market direction. Step 4, entry. This is where we enter, not at random crossover. Step 5, risk. Stop loss below structure. If you don't understand the structure correctly, watch the next video in the end. Now your take profit target must be next high. Or 1:2 or 1:3 risk to reward ratio. Remember, MACD is not entry. MACD is confirmation. MACD, second example. Opposite scenario. Sell setup. Let's look at one more example. In this chart we can see clear consolidation between two price range. Price sweeps the liquidity, then breaks this minor low. This break of structure tells us sellers are now in control. Now we wait for pullback. Price pulls back to previous structure. Or small order block. Or imbalance zone. Now look at MACD. We are not using MACD to predict. We use MACD to confirm the move. Now we have already confirmed that trend is bearish. Price pullback to imbalance zone complete. MACD gives us a clear signal to enter. Now we enter here. Stop loss below structure. Target next liquidity zone. My friend, this is very important. If you use MACD alone, you will lose. Because MACD does not understand structure. It does not see support or resistance. It only reacts to price. So always remember this. Structure gives you direction. Then MACD gives us confirmation. MACD with multi-timeframe. My friend, let's not guess. Let's read the market step by step. Step 1, higher timeframe, identify the direction. First, we look at the bigger picture in 15-minute or 1-hour chart. See this, higher highs, higher lows. This means, market is bullish. We don't take random trades, we follow direction. Step 2, wait for pullback, patience. Now we wait. Price comes back, this is where most traders panic. But this is opportunity, not fear. What should we do here? Marking the support and resistance level on the higher time frame. Then we switch to lower time frame. Step 3, lower time frame, entry zone. Switch to 1 minute or 5 minute. Now we zoom in. Here is where execution happens. Now look at MACD. We are not using MACD to predict. We use MACD to confirm the move. Direction from higher time frame. Entry confirmation from lower time frame. So what do we have now? Trend up. Pullback complete. MACD confirms. Now we enter here. Step 4, stop loss and target. Stop loss below structure. Target next high. So always remember this. MACD follows the market. It does not lead the market. If you trade MACD alone, you are guessing. If you combine it with structure, you are trading like a professional. If you want to master gold trading step by step, watch my full course on the channel. Subscribe if you find this lesson valuable to you. See you in the next lesson.